Hey everyone, John Henry here, SSFTG. Welcome to this video. Now, this video is going to be a little bit of a different one, and it's going to be a reiteration of a video that I've kind of already done before, but has become more and more and more prevalent, especially with these incredibly strong trends that we've got going on these days. So first things first, let's blow up the 15-minute, and this chart is just totally empty. There's nothing on it, there's no indicators, there's nothing. Actually, I think there's one indicator just to show me where the current price is. One to label horizontal lines too. So there aren't any indicators on here. And what I like looking at, especially in these types of trends, now don't get me wrong, this will work in basically anything, but what I'm looking for is a value pullback and a double value pullback. Now, if you haven't been in our room in the morning session, first of all, you're definitely missing out and you should join in the room. But second of all, I talk about value pullbacks and double value pullbacks all the time. And the way that they kind of operate is more of a way to determine where is it an opportune location to get in terms of potential pricing location. So pricing location, what do I mean by that? What I'm talking about is it's based on percentages, right? And this may sound familiar because this is a video that I have done before and I do it all the time in the room. But this is a way that we can measure out what's been going on during this sequence. So if we look over here, we've got a top and a bottom that was incredibly obvious, right? Very, very obvious reversal from high to low. There's no questioning that that is a very obvious pullback. And I say pullback because we know the trend is up. Now, as we continue further, we've got another one, which was right here from top to bottom. It's 1.75. And then after that, things kind of dried up a little bit. The pullbacks haven't been anywhere near as large, but if we look at the last pullbacks, I barely even want to call this one, but I guess 0.75. If it's not over 1, I'm not even going to pay attention to it. We've got this high over, technically over here. There we go, 0.92. Of course, it would be something extremely close. Fine. All right, let's just do them all. Let's be fair. And then we can continue further. We've got the next pullback, which was a nice heavy one right here, 1.15. And then the one that is currently forming, which is currently 1.06 or so. So what this is giving us is a general percentage, and we can use this to create an average. So 2.3, 1.75, 0.76, 0.92, 1.15, and 1.06. And then we're going to divide that by the total numbers. So we've got 3, 4, 5, 6 of them. So divided by 6, 1.32 on average is a value pullback, give or take, right? So if we're looking at that 1.32, there we go. That is an average, based on averages, a good, valuable pullback. So the next time the market drops by that amount, I want to start paying attention. That is a valuable pullback that has created a situation, 1.32, there we go, that would give me a zone of interest to pay, very close attention to in terms of a value perspective. That would be a singular value pullback, and that's usually what you end up getting in these really strong trends. Now, the double value pullback should be pretty self-explanatory, but this is where the trend finally stops going so ballistic. And that's where it kind of has that relief pullback where everyone kind of has a chance to respond again, That's where the double value pullback comes into play. So the name says it all, but we take that value and we double it down, and now it would be 2.64% to the downside. That would create a value pullback area at about 14,488 and 75. And if we look backward, we can see, well, wait, there's some really nice support resistance inside there as well. So we're kind of building a story of this is a great spot. If we can finally get a pullback, a double value pullback, that would put us smack into that previous area of support. And that's exactly where you want to be if you're trying to buy the low with some good defense behind you. Now here, obviously, I'm looking at a 15-minute chart, so we're going to get a few less of them, but this happens all over the place, constantly throughout the day. If we zoom into a 5-minute chart as an example, and we can see that, let's go a little ways back, obviously this trend just keeps going higher, but if we look at the average pullbacks while the market is continuing back to the upside, it gives us the same concept. Let's say right here, right? They put in a very strong bottom, and started reversing back up. So obviously from the top to the bottom there, that's an incredibly valuable pullback, 0.94. We're already kind of reaching back out into the 1%, into the higher percentages from the 15-minute time frame. Now, if we go and kind of continue this back forward, you could even measure up some of these micro pullbacks, 0.24. We've got top to bottom, 0.24. We've got top to bottom, 0.26. So you can see what I mean. These happen over and over and over and over and over and over again, constantly. And when we're looking for that double value pullback, just out of sheer curiosity, obviously, well, I guess we can just say 0.25. Is that fair? I think that's fair. Let's just go to 0.25 and see if they got a double value pullback. We got 0.25. We've got 0.25. That gives us our 0.05. That is your zone of support. So it creates these major zones of confluence that typically are going to want to line up with buyers getting in. And remember, the buyers on this dip, these are swing traders, okay? And that's important to understand because swing traders, that means low probability or a low likelihood of success on the trade. But the trade-off for that is they're able to buy here and risk not a whole lot, really. If it starts breaking down through that double value area by too much, then, I mean, realistically, it could potentially be reversing. But the upside objective is massive. You're looking all the way back to the highs at, I don't know what happened there. You're looking all the way back up to the highs for the first objectives and the potential for it to continue back up because of it being a pullback and a bull trend. So this offers up some fantastic zones of interest for incredibly low risk for sometimes just absolutely gargantuan reward to the upside. They're absolutely incredible. So that's what I'm talking about when I'm looking at value pullbacks and double value pullbacks. They can set up in ranges, they can set up all over the place, but typically where they really shine are in trends like this when you're trying to figure out where the counter trend move will end, right? Where the resumption of the trend will continue back up. Now, if you can line this up with other things, as an example, getting an order flow volume profile or something to line up around that area would be absolutely incredible. Let's go back to the impulse high. That's not quite right. Let's try again. There we go. So, it's not perfect, but we've got a POC that's also acting as defense. Arguably, this whole zone is kind of the area of interest. Without getting into the reasons why traders would enter here, that's a different video all in and of itself. But this is just a fantastic way that you can really start stacking the odds in your favor in terms of timing to create a situation where you don't have to risk that much for some gargantuan moves. Obviously, this is an extreme example, but you'll see this over and over and over again. And it's very interesting. If you take some time to go through some charts, definitely study these. You'll see them all over the place. It's really cool. But hopefully that finds you well and you're doing well today and all that fun stuff. If you have any questions, of course, send an email in jhb@ssftg.com, or you can always swing by to our live room in the morning and drop in and drop some comments and join us there. Either way, we'll see you in the next one, all right? Have a good one. We'll talk to y'all later. Thanks.